Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Several Fed officials signal a willingness to pause rate cuts at their next meeting, citing a U.S. labor market that appears to be stabilizing as well as lingering inflation pressures. The US and Taiwan strike a trade deal that lowers tariffs on goods from the island to 15% and ramps up chip investment in America. Plus, Adnoc mulls investing in Venezuela as the energy giant looks to build out its global natural gas business. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. What a week it has been from a geopolitical perspective, also for markets as well, and earnings, with the earnings coming thick and fast from the U.S., especially with those bank earnings. What we're seeing today is a very strong handover from Asia Pacific, up 0.5%. That index is at an all-time record high, boosted overnight by the stronger results coming through from TSMC. I'll get to that in a moment. Take a look at the S&P as well. We are above 7,000 again. So leaning towards green, up 0.3%, a better session yesterday for U.S. Wall Street indices. And again, the tech sector recovering from some of the losses of the day before. 10-year yield sitting at 4.16. We're down a fraction this morning, but we did sell off a couple of basis points yesterday after those initial jobless claims came in lower than expectations, pointing to, again, some robustness in the labor market. So again, something for Fed policymakers to think about after that benign CPI print earlier in the week. And then Brent, keeping a close eye on all the price action in oil, obviously. But as some of the tension in Iran dies down, at least from a broader world, global perspective and President Trump's perspective, we have seen some of the geopolitical premium come out there. We are down about 0.2%. $63.64 is where we're at. Now, I did mention TSMC. It has been a big driver overnight for the semiconductor space, also for the broader AI tech sector as well, namely because not only did their earnings beat on sales, as we broke on the show yesterday with Annabelle, but also their guidance for next year was pretty positive as well. CapEx spending numbers came in quite robust. And so all of that led to a strong performance in TSMC. It was up about 4% yesterday in trading, but also driving some of its key suppliers too. So the likes of NVIDIA also jumped yesterday, and then ASML, one of its other key suppliers, also jumping in trading. So you can see that from the charts, and really how well not just ASML has done, but TSMC has done just in the last couple of weeks, the first couple of weeks of this year. NVIDIA trading a bit sideways. Okay, let's also check in on how markets in Asia are faring today. Winnie Su is in our Hong Kong studio. I was just walking through the TSMC effects on global markets. Winnie.
Yeah, morning, Jomana. Absolutely, TSMC is that key driver for the overall sentiment in Asia today, as we're seeing that MSCI Asia here up 0.5%. And that is taking us to the best week so far since September. So pretty strong week for us this time around. And that, like you mentioned, is driven by the strength in tech. We have Taiwanese stocks benchmark up more than 2%. And yes, it is that solid outlook for TSMC, but also the tariff agreement with the U.S. lifting sentiment as well. Supporting also here is the Kospi index, still up about 0.8% here, and it's up for 11th day so far, and getting close to that 5,000 target that President Lee Jae-myung has. I believe we're about 3% away from that level. In terms of cross asset, we are seeing Japanese yen finally finding a bit of a support here with Satsuki Katayama, who is the finance minister, warning of the yen's weakness. When it comes to the Chinese market, we can see red across the board, and that weakness is really being driven by a series of market cooling measures that the regulators had, with the latest being China clamping down on these high-frequency trading and by taking away some of the servers of these companies. So that is really weighing on sentiment here, and specifically for brokerages and also metals listed in Shanghai. Back to you, Jomana.
Thank you, Winnie. That was Winnie Su in Hong Kong. For more market insights, joining us now is Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Rashmi, it's been a couple of weeks into 2026. So far, markets seem to be doing okay, brushing off some of the geopolitical surprises that we've had so far. How are you feeling about the path forward for equities this year?
Good morning, Jumana. And yes, this year seems to be another good year for equities. We are quite bullish on the equity markets this year. We expect the markets to provide good returns, maybe not as good as last year, but we still expect a fairly good return from global markets. And we expect the rally to broaden a little bit. So whereas last year was all about the AI theme, this year we do expect the rally to broaden a little bit. We are more positive on industrials, metals and mining. We also like certain themes like rare earths, uranium, etc. And then we also like financials and healthcare. And we are very positive on aerospace and defense outside the US.
Okay, so the rally to broaden out beyond AI, you mentioned some of those sectors, rare earths, metals. We've seen a massive run-up in that space towards the end of the year last year. What gives you confidence that this is going to continue in 2026?
So yes, I think, as far as rare earths are concerned, I think it is really a question about demand and supply and the need for these, these rare earths in certain critical components of defense as well as AI. And I think that is where, that need is pretty much there. And therefore, I think, which is why we expect this theme to remain strong. In terms of metals and mining, so there are certain metals, for example, copper is more of a demand and supply situation. For gold, we see this as a tail risk hedge. We see this as a hedge against, the wider geopolitical backdrop as well as the de-dollarization trend. So which is where we are positive. On the mining equipment side, if we see strength in these metals, and we do expect mining equipment demand to be strong, and these stocks haven't done so well last year, so which is why we are positive here.
Okay, financials also one of your picks. We have had earnings from multiple Wall Street banks this week, and a wedge seems to be opening up between the investment banking banks and the banks that have more of a commercial banking exposure, namely because of some of the actions that President Trump has announced that he's looking to take, the capping of the credit card on credit card interest rates. How does that affect where you want to be positioned in the space?
Yeah, so you're right, Jemana. There is a bit of a difference here, and we are more positioned towards the increase in M&A. So we are more, positive towards, because we do expect the interest rates to be down this year. So we do expect more deals to happen, as a result of which we are more positioned in the names which benefit from this increase in deals, and therefore more on the investment banking side. We are more positive on that space. As far as commercial banking is concerned, we are still positive here because we do think that, this is a midterm election year, so which is why we can expect some populist measures. But at the same time, the deregulation that is going to hit the market is going to be positive for these banks. So we are more positive on the investment banking side, less so on the commercial banking, but overall we are positive on the banking space.
Are there any parts of the market that you're staying away from?
So we are a bit more cautious on software names, and we are also cautious on hyperscalers. The reason why we are cautious on those two spaces is because for the hyperscalers, I think the investors are getting a bit sensitive on the capex, the heavy capex that we've been seeing. We haven't yet seen return on investments on this capex. And if by the end of this year we don't see that, then I think there will be a point when the investors start punishing this capex. So this is where we are a bit cautious. On the software side, we see a lot of competition from startups, from AI startups as well as large language models. And there is still, not clear differentiation between the legacy software names in terms of what is the edge that they can provide on these startups, which is where we see them being challenged. And that's why we are cautious here.
And how do you see the U.S. versus the rest of the world? Is this going to be the year where U.S. exceptionalism makes a comeback?
No, we do not think that this year we will see a comeback of U.S. exceptionalism. U.S. remains a great market, and we do like selected themes in the U.S. market. There are certain areas where, the kind of exposure that you can get in the U.S. markets, you do not get elsewhere. But at the same time, we like markets outside the US. So, for example, our focus is more on themes. We like memory. Now, whether it is US or outside US, if we find global players in memory, we will invest in them. So, for example, Korea is a great market for memory investment. So we are very positive on Korea. outside the US, we are very positive on aerospace and defense because we do feel that, the US focus on like NATO sort of refurbishing their arms and ammunition repositories is going to benefit the outside US names, and Korea and Japan are also beneficiaries of that. So we like outside US markets. In China, we like the large cap techs because we do see we do like what is happening in the Chinese AI space, and we do see these large cap tech names to be beneficiaries of that. So we are sort of, broad based here in terms of geographies, and we are going towards themes, whatever geography it might be.
Rashmi, thank you so much. A real pleasure to chat to you today. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Well, coming up, the US and Taiwan have now agreed to a trade pact. We look at what this means for the Taiwanese economy and the chip sector next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The US and Taiwan have agreed to a trade pact that would lower tariffs on goods from the island to 15%. In return, Taiwanese semiconductor companies will increase financing for their American operations by $500 billion. Let's go to Taipei now and speak to Bloomberg's Annabelle Jewelers. So big news for Taiwan. What does it actually mean for the country, and why are semiconductors right at the heart of it?
Well, I mean, semiconductors are really the backbone of the Taiwanese economy. So this is a deal that's really been months in the making, and one that we understood that Taipei was really trying to push forward before President Trump is due to meet with President Xi in China in April of this year. So it has been very much a long-sought trade pact, but just at the headline level, what it's going to do is reduce the tariffs on Taiwanese goods that are being imported into the US to 15%. So down from the 20% that it has been, you pretty much bring them online or in line with the accords that Japan and Korea, their peers in the region, already struck with Washington last year. So yes, you mentioned that $500 billion commitment. Just to break that down, there's sort of two key components to this, rather. So $250 billion in direct investments into the state. So that's about expanding their advanced semiconductor, energy, artificial operations stateside. And the other part is $250 billion in credit guarantees, so looking at furthering their investments essentially in the American semiconductor supply chain. So big announcement, and as we said, something that Taipei at least has certainly been pushing for quite a period now.
Well, we know President Trump loves a big headline. Out of this one, we got $500 billion. That includes, as you mentioned, direct investments, some credit guarantees. Is this all a new figure, or does it include some pre-committed funding?
Yeah, it does include some pre-committed funding. So we sort of got some more details on this from an interview that the Commerce Secretary Howard Lutnick did with CNBC. But essentially he was saying that of that $250 billion in direct investments, yes, some of that would incorporate commitments that TSMC, the leading chip maker in Taiwan, of course, made last year, which have totaled $165 billion. But it is very unclear because the US Commerce Department readout or statement we got on this accord didn't actually mention TSMC by name, but it's obviously very clearly implicated in this. And we just had the TSMC earnings, for instance, coming out yesterday after the bell. We saw a huge ramp up in capex for the company, looking at $52 to $56 billion for this year. So big increase from 2025, and one that they're pledging is going to go even higher over the coming 3 years. So it is that question, how much are they looking to expand in the US, given they've already got that big build out and big pledges for Arizona, but would they be looking to add more fabs essentially, given they've just acquired a second site in that state as well?
Bloomberg's Annabelle Jewelers, thank you so much. Now, the UAE state oil giant is said to be evaluating options for a potential entry into Venezuela's energy industry as it looks to build out its international natural gas business. For more on this Bloomberg exclusive, we're joined by Anthony DePaula. So really interesting that Adnoc also are considering potentially investing in Venezuela, according to your reporting. And there was that meeting that Trump had with the oil executives a couple of days ago, and many of them were expressing reservations about the conditions on the ground now to invest. What would Adnoc need to see in order to invest?
Yeah, that's right, Juman. I mean, it's very early days anyway for anyone looking to get in there because they are still trying to see what the political situation is going to be, how that's going to work out, what the legal framework is going to be. One of the most outspoken companies there in the White House was Exxon, which said that under current conditions, Venezuela is uninvestable and that they would need an invitation from the Venezuelan government and they would need kind of a framework. So, and to have some insurances. So rather than an invitation from Trump, who's trying to get companies to go in there, they would want the government there, and they would want to know that some of those investments are going to be safe. So what we're hearing from here, from Abu Dhabi as well, is that they are looking at that situation, trying to understand it, and they would also need some kind of a framework for that investment in order to secure that. But that fits into kind of this idea of Adnoc that they're looking to expand natural gas in particular. And the Americas is really a region that they're looking at. We also reported a few months ago that they're looking at LNG in Argentina. And they have just recently bought some assets and some supply on the U.S. Gulf Coast. So it's that same kind of area where they want to be able to supply the Americas, supply into Europe, supply into Asia as well. Yeah,
gas and chemicals, obviously a big focus for their international arm, XRG. Do we have any understanding of how a potential investment in Venezuela could be structured?
Adnoc likes to go in with partnerships. So as you said, they would be using the international arm XRG, which is the one that has made those deals in Argentina and the Gulf Coast. And so they like to go in with partnerships there. So they're in with various other companies that a lot of them who they work with here in the UAE on the big oil fields, on the big gas projects here in the UAE. So they like to go in with somebody maybe who's got some local knowledge. We've mentioned Exxon is there. Chevron is producing there. They are partners with Eni and Total, who are also companies that had been in there. Spanish Repsol, French Maurel and Prom are producing. Shell has a contract for some natural gas there, and they're also working in Trinidad and Tobago, which is right next door. So there are different companies that Adnoc knows, and they would like to get in there with somebody who's got some local knowledge.
How much potential does Venezuela actually offer in the world of gas? I mean, when we've been talking about Venezuela the last couple of weeks, it's most of the narrative has been around oil. They sit on the largest reserves of oil in the world. What potential is there in gas?
Yeah, gas is big. It's about more than 2/3 of the gas in South America. So the reserves are very big. When you've got huge oil reserves like you do in Venezuela, there's a lot of associated gas, which is gas that's found in the same well. And in places where the infrastructure has been degraded, hasn't been built up, a lot of that gas is not captured. It's simply burnt off. So there's potential, but there's also a lot of work that needs to be done because you need those facilities to be able to capture that gas. You need to be able to use it. Potentially, you need to then have tie-ins to be able to transport it. So neighboring Trinidad and Tobago's got a LNG facility, but there's not yet the connections put in to export that gas. But I think anyone going in there would be looking at an export possibility. Most of that gas, as I said, is burnt off. The rest is used domestically, but that's a big opportunity to have that potentially exported in the region and farther abroad.
Okay, super interesting. Anthony, thank you so much for bringing us that story. Bloomberg's Anthony Zapola. Now for a look at some of the other stories we're following today. President Trump has accepted Venezuelan opposition leader Maria Corina Machado's Nobel Peace Prize medal, saying in a social media post that it's a great honor. Machado says she handed it to Trump during their White House meeting as a recognition of his unique commitment to Venezuela's freedom. Machado is trying to get back in Trump's good graces after he backed Venezuela's deputy president to take over following the raid to capture the president, Nicolas Maduro. U.S. President Donald Trump has announced the creation of a Gaza border peace, which is seen as a centerpiece of the next phase of the U.S.-backed peace plan. This phase is said to focus on the demilitarization of Hamas, as well as reconstruction and transitional governance of the Palestinian territory. Trump is calling on Hamas to honor its commitments immediately. And coming up, a solar boom in rural Nigeria is lifting local economies. We'll take a deeper dive into the drivers and impact later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. TSMC says it will try to speed up the transfer of its advanced chip-making expertise to the U.S. while continuing to develop and maintain its top fabrication techniques at home. CFO Wendell Huang tells us that even with faster transfers, it would still take at least a year for mass foreign production of its leading technology.
We don't look at it this way. It really depends on customer demand. In the U.S., a lot of customer wants to go there, so we will expand over there. But for the leading edge technologies, it will be in Taiwan because it's a heavy cooperation between the R&D people and operation people for practical reasons.
And leading edge will continue to be led by Taiwan, you think, over the US market, and that no changes to that at all, even with you adding a lot more capacity in the States?
Yeah, that's for practical reasons.
Is it possible, though, to speed up how quickly that advanced tech can be shifted from Taiwan to the States?
Yeah, we can try to do that, to shorten the gap.
What does that transfer gap look like then? If right now it's several years, Taiwan is ahead, what does that actually look like in the future?
We don't have a specific timeline now, but we can try to accelerate that. We think we can try to accelerate.
Could it be shortened to months, do you think?
It will be difficult, challenging.
Okay, so it stays at least one year behind then.
That was TSMC CFO Wendell Huang speaking to our colleague Annabelle Jewellers, who was just on the show a short while ago talking about TSMC too. Okay, let's take a look at markets. And TSMC is still a big part of the narrative after their very strong earnings yesterday and strong guidance for the year that sort of set the tone for Asia, for tech stocks. And today there is green on the board. The S&P futures above 7,000, leaning towards a positive session, up 0.3%. European markets down 0.3%. So keeping a close eye on the price action there. But coming up, as Iran sees its deadliest anti-government unrest since 1979, its Islamic Revolutionary Guard, the IRGC, remain firmly in control. We look at what's at stake in today's Big Take. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Several Fed officials signal a willingness to pause rate cuts at their next meeting, citing a U.S. labor market that appears to be stabilizing, as well as lingering inflation pressures. The U.S. and Taiwan strike a trade deal that lowers tariffs on goods from the island to 15% and ramps up chip investment in America. Plus, we look into how a solar boom in rural Nigeria is transforming local economies. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. These are your markets today, leaning towards positive, a better end for Wall Street. Yesterday, we spoke about TSMC. Good results there, solid, set the tone for the sector. The handover from Asia Pacific also quite bullish today, up 0.5%, an all-time record high for that index. S&P futures up 7,000, up above 7,000, 0.3% firmer. 10-year yields at 4.16. We did have jobless claims, a surprise to the downside yesterday. So again, another sign of perhaps the resilience of the U.S. labor market for the time being. On the back of that, we saw a repricing slightly higher of those yields. And then Brent sitting at $63.60, thereabouts, down about 0.3%. And obviously regaining some of the ground that was lost in the last couple of days. But then it has been quite a volatile week for oil. At some point, we did see the geopolitical premium price up because of the unrest in Iran. And then it got priced out yesterday. Today, some stabilization coming through in that space. And switching over, I just want to point out to you again, talking about the TSMC, very heavy Taiwan theme on the show today, but it is important. The results came out strong and boosted other names in the sector as well, including ASML and NVIDIA, both key suppliers to the world's largest foundry. So obviously it was going to be a bellwether for some of those other stocks in the space as well, and for the broader AI chip-making set. All right, short-term Treasury yields have risen after U.S. jobless claims figures came in lower than all estimates. It's the latest sign that the job market is strong enough for the Fed to pause cutting rates this month and possibly not to resume before mid-year. My next guest says the short end converging with the Fed funds rate for the first time in years could be seen as a sign that the central bank is finally in the right place. Joining us is Zeina Rizk, co-head of fixed income at Amwal Capital. Good morning to you and Happy New Year, Zeina. I hadn't actually noticed that the two-year rate in the U.S., two-year Treasury yields had converged with the Fed fund rate. Does that tell you that perhaps a lot of the juice has come out of the front end of the yield curve?
I think the biggest part of the rate cut is already done. And it's questionable if we're going to have one or two cuts more. But if you look at the figures, as you said, we're seeing mixed figures. We're seeing a lot of revisions in the figures. So you don't really have strong, despite what President Trump wants. If we look only at the economy, we don't see strong reason for the Fed to cut significantly more this year.
Most people I speak to seem to be in the steepener camp this year. Are you in that camp as well?
There's a big risk of that. There's a big risk of that for several factors. One of them is that the long end is still unanchored for several reasons. If cuts are preempted and we have inflation unanchoring, we're going to have a twist and significant steepening in the yield curve. You also have the term premium that is significantly higher because of all the uncertainties that are there. So yes, for the time being, we're still positioned in the belly of the curve until we have better clarity and then decide if we're
around 5 years, somewhere around that. Okay, let's talk about this region in particular, the GCC region. And I'm going to say, if you look back at last year, you did have several positive tailwinds come through, and you had several rating upgrades as well. People forget that. And spreads continue to tighten despite the region, especially Saudi Arabia, bringing a lot of issuance to the market. Yeah. How is 2026 going to be different from 2025, do you think, in this part of the world?
For the time being, it's pretty similar. The main difference is that we're starting from way tighter valuations. Yeah. And I think we'll need to wait for two things to pan out, mainly for us to see how this year is going to look like. The first one is how the US is going to be and what's going to happen to rate cuts. Obviously, broadly moves on one-to-one with this region. And the second aspect is the geopolitics. So now you're very much in a wait-and-see mode to see how it's going to pan out. If in a base case that this is going to calm down and going to continue in relatively calm scenario, I think we can stay in this spread and with a bit of tightening. The room for tightening is lower, obviously, than last year, but I don't see reason for widening.
Yeah, it's interesting because last year was a major year for geopolitics, and 2026, just in the first couple of weeks of the year, is also shaping up to be similar, and yet it doesn't seem to be impacting GCC spreads at all.
Not yet. That's true. Not yet. You see some nervousness in the market, but people are not yet selling out. Because if you look at what happened last year, in the midst of everything, spreads were more or less contained. The difference was happening, the main movement were happening on oil, but spreads were more or less contained. There was a lot of complacency there also. Yeah. But this time seems, we always say that, but this time seems different from the way it happened. So you have a wait-and-see mode. Internationals that have room to diversify are waiting and seeing, and people that are here, you have a lot of money there. It's so obvious from the new issues, but there's more of a wait-and-see mode at this point.
Yeah, and Saudi Arabia already started the year off with a massive amount of issuance. Absolutely. They came to the market. They're also looking for private deals as well to plug in some of the holes that they have. How do you see the borrowing profile evolving over the course of this year? Because in prior years, and especially last year, they did overshoot some of their targets.
Absolutely. The NDMC they published its report. Yes, it's half-half now between public and private markets. I think that they're going to continue on the same trend. I think that they will continue issuing as long as the market take it, and the market is taking it. Despite the massive supply that is coming from Saudi remains a very strong fundamentally. And if you compare it to other countries, like if you compare it, for example, to Indonesia, they're trading roughly flat to each other. So yes, Indo versus Saudi, people would definitely buy Saudi. So I think that they will continue on this trend, and absent any surprise negatively from oil or from geopolitics, I think markets will still have appetite.
Are you watching what's happening in Lebanon with the Eurobonds there?
Obviously, yeah.
Back up to 29 cents on the dollar. Is that all in reaction to the release of the draft law for the banks? Why are we seeing this?
I mean, purely from a debt holder perspective, barring the subjectivity from Lebanese, I think there is movement there. So we've had a gas deal, we've had that law. Yes, there are a lot of question marks with regard to that law, but at least there is movement. From a purely debt holder perspective and IMF, the hierarchy of depositors of payment makes sense now as opposed to what it was before.
Yeah.
The debt law doesn't really specify who's carrying the biggest burden of the debt. So this is obviously crucial for debt sustainability and debt servicing. I'm sure it's going to be revised, but at least it's one step as opposed to stalling for years.
And do you think this has more to go, though, around, I mean, we're already, up to 30 cents on the dollar?
This is very speculative, I think, because the actual value remains into what's the recovery value of the bond, and we're still far from this determining that. But now it's just the movement from the geopolitics that arguably some are seeing them positive for Lebanon, and the movement there that is happening.
Yeah. Zeina, thank you so much. Always good to chat to you. Zeina Rizk, co-head of fixed income at Amwal Capital. Well, despite U.S. President Donald Trump saying he's holding off on an Iran strike for now, the U.S. envoy has renewed threats against Iran at the UN Security Council, saying all options are on the table. So far, Iran's Islamic Revolutionary Guard remain firmly in control, and even if protests come to an end, it seems the IRGC will play a pivotal role in what comes next. It is the subject of today's Big Take, and Bloomberg's Patrick Sykes joins me now with more. Fantastic Big Take on the terminal today. I recommend any of the viewers watching take a moment and read through it, because I really think there's a fundamental misunderstanding of exactly who the Revolutionary Guard are and what role they play in Iran today, because it's not just the regime at the top, but you have this massive security force and layer of security forces that are operating within that central command. Talk to us about the role they might play and how this Iranian uprising might unfold in the next couple of weeks, Patrick.
Yeah, the point we wanted to make really with this piece was that the IRGC isn't just the body that's, most effectively putting down the protests with violence, but it's also the one with the most to lose if anything changes substantially. And we set out a few scenarios for what might happen next. The first, emergence of a kind of strongman that could take over, or perhaps several of them. If that happens, it's likely to run through the ranks of the IRGC. It's not just that senior military leadership that we hear all the usual rhetoric against American Israel from. It's also people who were once in the IRGC, have since moved to civilian positions. Think of the foreign minister, the Speaker of Parliament, advisors to the Supreme Leader. The second option is an outright military coup. On that case, the IRGC is just straightforwardly the most powerful part of Iran's military, far stronger than the conventional military that it was set up after the revolution to counterbalance. And then third, a kind of slow decay into chaos. If the protests are put down, we revert to some kind of uneasy status quo, but the Islamic Republic still doesn't have tools in its toolbox to kind of address the fundamental challenges. In that case, anything that really changes, it's about potential defections from the security forces, most notably the IRGC, whether or not they start to disobey orders, to shoot on protesters, whether or not they see that their best bet is siding with protesters or sticking with the status quo. And then the wild card in all of it, of course, is Trump and this threat that you mentioned of US military intervention. In that case, too, it's the IRGC that would likely be targeted, again, because they've been putting down the protests. And it would be them that's responsible for the response. Think about the June war with Israel, where it was IRGC missiles that were flying into around Tel Aviv. It was IRGC missiles that were flying to that US base in Qatar. So from where we're looking, whatever happens next in Iran, it's about the IRGC is going to be really key to what happens next.
Patrick, thank you so much. Patrick Sykes, our breaking news editor in Istanbul. Well, you can read the story and all our previous Big Takes on Bloomberg.com and the terminal. Just type NI Big Take, go. Coming up, a solar boom in rural Nigeria is creating new opportunities for businesses and investors. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Nigeria is emerging as one of Africa's biggest growth markets for solar power as falling costs and supportive regulations drive investment into off-grid energy. The shift is helping businesses cut fuel expenses, boost productivity and operate longer hours. Our Chief Africa correspondent Jennifer Zabazaja joins us from London. Interesting that Nigeria has become such a big market for solar, especially given the rise in silver prices that we're seeing. What is driving the surge in investment, Jen?
That's right, Jumana, especially if you take a look at what we've seen from Nigeria over the past few decades. They have a grid that is largely dated, a national grid dated since back in the 60s, and also largely been powered by the likes of natural gas. And so the fact that there has been a solar boom is welcome news. If you just take a look at some of the investment that we've seen the biggest operator of solar mini grids that's continued their investment into Nigeria and also India. And really, the reason is because, you know, what we were just mentioning there. This is a population of 90 million people, one of the biggest populations on the continent. It sort of switches between a few other countries. And so the need to have consistent and reliable energy access has been there for a while. And depending on generators and also natural gas has not been something that has been sustaining and also helping with the growth of the economy. And so, yes, we have seen Mission 300 and the World Bank and a number of other countries coming in and trying to support this continued growth of solar.
You speak on the impact of the economy. How much of an impact has this solar boom actually had on businesses?
Well, you were just mentioning there in the intro, we have seen increased productivity. Just a few years ago, you would talk to the local shop owners and they had to close early because they didn't know if they had consistent electricity and also water becoming an issue. So now that there is reliable solar for many of these communities, they're able to stay open longer. Potentially then we start to see increased manufacturing, local manufacturing proliferating across the economy and also potentially job creation then comes. And the expectation is that we'll continue to see more transformation, not just at the local level, but also commercially. And so that is part of the reason why Bloomberg is reporting that more and more investors and some of these big solar communities and millions of dollars is going into this economy because there is quite a bit of potential growth there, not just for solar, but also for the continued boost and contribution to the economic growth.
Jen, thank you so much for bringing us that story. Jennifer Zabazaja, our Chief Africa correspondent in London this week. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website. You can now also get the latest news from our continent on our weekly podcast, available on platforms such as Apple and Spotify. And for a deeper dive, catch our TV show Next Africa, airing on TV on next Friday. You can still watch our previous episodes in full on your terminal, our website, and on YouTube. And coming up, Abu Dhabi's ALTÉRRA plans a new $1 billion climate fund with BBVA. We'll speak to Majid Al Suwaidi, the CEO of ALTÉRRA, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Now, Abu Dhabi's climate investment platform, ALTÉRRA, is planning a new $1.2 billion co-investment vehicle, with Spain's BBVA committing $250 million as a strategic partner. The fund is part of the UAE's broader push to mobilize private capital into climate-aligned investments across infrastructure, private equity, and private credit. For now, we are joined by Majid Al Suwaidi, CEO of ALTÉRRA. Really good to have you on. A big announcement from ALTÉRRA today, this partnership with BBVA and plans for the new $1.2 billion climate co-investment vehicle. Talk us through it and the significance of bringing on this external funding.
Jumana, thank you so much for having me. It's really a pleasure to be here with you this morning. And yes, we're really, really excited about this new partnership with BBVA, a strategic partnership. You know, BBVA is one of the largest banks in Europe and globally, has the credibility when it comes to sustainability, joining forces with ALTÉRRA. And we've really charted a path over the last 2 years since our formation at COP28, if you remember, of consistently delivering when it comes to climate investing and being a leader in the space. We are now invested in 99 gigawatts of renewable energy around the world. We've got 30 companies invested in 40 countries. And we're really, really excited about the progress that we're making. We're really, really excited about how we're progressing. And this new fund is the next step in our journey. And it's really, really exciting for us.
Yeah, this 1.2 billion fund, can you give us any more color on perhaps some of the other LPs that might be involved in it as well?
Well, I don't like to. We've been in conversation with a lot of different LPs who are really interested to join us in this. I think that what we want to be is careful about the partners we choose who join us in it. We spent a lot of time working with BBVA. We want to make sure that we're aligned in our mission, that they understand that we're a climate fund, that we're trying to invest with integrity around the world. So we're going to pick partners who want to be part of that journey. We're in conversations with many, and I hope I'll be able to come and tell you about some of those on your channel. Over the next year, we're going to be working to try to have as many partners as we can.
Yeah. So I think the last time we spoke, which was over a year ago, we talked about the initial commitment from the UAE of $30 billion. And in your latest impact report, 2 years in, it says ALTÉRRA has helped mobilize over $51 billion in equity for climate investments. So how did we go from the mobilization of $30 billion to $51 billion?
Thank you, Jumana, for asking. This is a really important question. And I think one of the key exciting things about what we've been able to achieve over the last 2 years. Remember, what was announced at COP28 was a commitment from the UAE of $30 billion. We've really been successful in deploying rapidly, something you haven't seen from other funds, especially commitments launched at COPs. And that was key to what we wanted to do, is we wanted to show the UAE's commitment. We wanted to show how dynamic the UAE was and how we were able to do things really quickly. As you know, the commitment of $30 billion was made, $25 billion in acceleration fund, $5 billion in our transformation fund, which is tailored towards the global south. And then we set this sort of ambitious target of using that $30 billion commitment to mobilize $250 billion by 2030. What we then did was we took 6.5 of that 30 and we deployed that with BlackRock, TPG, and Brookfield. And those partners have allowed us to very quickly deploy capital across some of their existing strategies. But what I always get very excited about is the two strategies we created, the Brookfield and TPG, which are brand new funds, which we seeded working with those two partners, and they were able to go out and raise. So in the case of those particular two funds, for instance, as a good example, Brookfield was able to raise 9 times our seed capital, and TPG was able to raise 5 times our seed capital. And what we did was, in our impact report, was we looked across the spectrum of what we've invested in to date. We calculated with our partners the mobilization, so how much of our capital is mobilizing other capital, and we came to this $51 billion.
Yeah.
We feel very excited. We're, as I said, where we've come has been amazing in 2 years.
Yeah. Okay. So thank you for breaking down how we got from 30 to 51 billion and the investments in other funds and how that's led to further mobilization. You mentioned the ultimate goal of mobilizing $250 billion by the end of the decade. Is that still achievable? It feels like a really high number, and we're not that far away from the end of the decade.
Yeah, we wanted to set an ambitious target. I feel confident that we can achieve it. It's going to be tough, no doubt. But, you know, all good targets are tough, right? And so we're working hard at it. The pipeline is robust. This was something that we feel very proud as we've been able to develop a very robust pipeline of very fantastic investments. And what excites me a lot is that a lot of those investments are in the global south, where we had this clear target that we wanted to be mobilizing more capital to the global south. The developing world is growing so quickly, emerging markets, the demand for energy. And now, Jumana, if you think about the addition of AI and the impact that that has had in demand for energy, the ability for us to deploy capital is there. And what I think is even more exciting, which is that we're also showing that the private sector wants to be part of this sector. So our two funds that I mentioned, the one with Field TPG and this new fund with BBVA, shows that people want to deploy in this space, and ALTÉRRA is their preferred partner to do it because we have this robust climate impact framework that allows us to make sure that we're investing in the right things.
Yeah, okay, I've got a minute, but let me just bring it back to an interview you had with us in 2024. You said there weren't a lot of investable opportunities in developing markets and advanced economies. Has that changed?
Jumana, in that interview, we were discussing about the pipeline, and it was in the early days of us looking at how to develop our pipeline. I didn't actually say that there wasn't the opportunities there. What I said was we weren't clear about the investability. Since then, we've done a lot of work, and if you look at our white paper that we released recently, the opportunity of investable projects is actually amazing. And I would really encourage your viewers to take a look at our white paper. We think that there's a phenomenal pipeline. Actually, we know there's a phenomenal pipeline. We see it every day. And it's very clear that the pipeline is not the issue. We're definitely on track.
Thank you for taking my question. Your Excellency Majid Al Suwaidi, CEO of ALTÉRRA. That rounds up our show.